This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. India's daily gasoline consumption exceeded pre-pandemic levels last month as states relaxed COVID-19 related lockdowns while gasoil sales were low, signaling subdued industrial activity in July, showed preliminary sales data of state fuel retailers. Daily sales of gasoline rose to 76,500 tons in July, a jump of about 3.6% over the corresponding 2019 period and 5.7% over June this year, preliminary industry data showed on Friday. India's gasoline sales recovered to pre-pandemic levels in October 2020 before a second deadly wave of infections began hitting the fuel's demand in April. Rising fuel sales in India, the world's third biggest oil importer and consumer, is a positive development for global oil markets.
The European Union will retain its tariffs on U.S. biodiesel for a further 5 years after concluding that removing them would likely lead to a surge of imports at artificially low prices. The tariffs, dating back to 2009, will be extended until 2026, the EU official journal said on Monday. The European Commission, which reviewed the case, concluded that U.S. producers could increase to full capacity and also divert sales from some of their exports from less profitable markets to the European Union, the world's largest market. It said U.S. producers were already selling to third countries at prices below those in the United States, meaning they were being dumped.
Moving on to the top news in the energy sector.
Oil prices fell on Monday as worries over China's economy resurfaced after a survey showing growth in factory activity slipped sharply in the world's second-largest oil consumer, with concerns compounded by higher crude output from OPEC producers. Brent crude oil futures slid by 87 cents, or 1.15%, to $74.54 a barrel by 11:45 GMT after touching a low of $74.10. U.S. West Texas Intermediate, WTI, crude futures dropped $1, or 1.4%, to $72.95 after slipping to a session low of $72.77.
Iran will respond promptly to any threat against its security, a foreign ministry spokesman said on Monday, after the United States, Israel and Britain blamed Tehran for an attack on an Israeli-managed tanker off the coast of Oman. Tehran has denied any involvement in the attack on Thursday in which 2 crew members, a Briton and a Romanian, were killed. The United States and Britain said on Sunday they would work with their allies to respond to the attack on the Mercer Street, a Liberian-flagged, Japanese-owned petroleum product tanker managed by Israeli-owned Zodiac Maritime.
Next, we have the top news in metal markets.
Rio Tinto Limited is set to ship a pilot lithium processing plant to Serbia from Melbourne in the coming weeks, the culmination of a decade's research to catapult the world's largest iron ore miner into battery minerals. The work, undertaken at a science hub on the outskirts of Melbourne, has found a way to economically extract lithium from jadarite, a mineral that has only been found in a Serbian valley. Rio last week hit the go button on the $2.4 billion project that will diversify the producer of iron ore, copper, aluminium and specialty minerals into a top 10 lithium producer, just as demand from electric vehicle makers booms.
Chinese ferrous futures fell on Monday, with steel rebar and hot-rolled coils both plunging some 6%, after Beijing updated its stance on carbon reduction work, raising worries of an adjustment in output cuts. A Politburo meeting chaired by President Xi Jinping on Friday said China should avoid campaign-style carbon reduction efforts. While there were some places blindly launched projects with high emissions and energy consumption, there were others that overreacted and made emission cut plans too early, state media Xinhua said in a commentary, adding that such attempts could affect normal economic development. We will now look at the top news in the agricultural sector. Unfavorable weather caused second corn yields in the center-south of Brazil to plunge to their lowest level in 10 years, agribusiness consultancy Ag Rural said on Monday, projecting productivity at 66.660 kilobags per hectare. After drought then frost spoiled much of the crop, Brazilian farmers are now expected to collect 51.6 million tons of second corn, almost 19 million tons below the 70.5 million from last season, Agri said. Second corn, planted after soybeans are harvested, is the country's main corn crop and accounts for 70% to 75% of production in a given year. With second corn, Brazil competes with the United States as one of the world's largest suppliers in world markets, selling to countries like Iran and Japan.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.